car insurance and insurance in general can just feel like a total waste of money. And sometimes it is. Sometimes it is good to have certain types of insurance, and sometimes you're just wasting your money. And especially when it comes to financial independence, you need to know what types of car insurance are going to be important for you and what types of car insurance are practically just throwing money down the drain. And today in this video, we are going to discuss briefly the types of car insurance and which ones I think are best for financial independence and which ones I think that you can drop to lower your overall car insurance bills. And I just want to say as a quick disclaimer that I am not a car insurance expert. I'm not an insurance expert of any means. This is totally my opinion, and you might not agree with that, and insurance experts might not agree with that, and that is perfectly fine. But I'm going to discuss the types of car insurance today in layman's terms, basically as how I understand them and why I think that you should or should not have them when you're on the path to financial independence and when you are already financially independent. And so first we need to talk about the actual types of car insurance. So the first type of car insurance we have is liability coverage. And within liability coverage, you typically have bodily injury liability and you have property damage liability. So if you cause an accident and the person in the accident needs like medical care or something like that. The other one is property damage. So if you hit someone and you damage their car or whatever property that might get damaged, that is typically going to pay for that amount of damage that you hold. And then next you have uninsured or underinsured motorist. So basically what that does is that pays for your medical bills or your passengers' medical bills if they get hurt in an accident that was not caused by you, that was caused by someone else that maybe has a low amount of insurance that was not enough to pay for your bills, or if they're not insured at all, because that does happen, maybe like a hit and run. And then we have something that actually covers the car, and that is comprehensive. So comprehensive car insurance covers your car from damage from certain amounts of things. So typically comprehensive means it covers a wider variety of things such as vandalism, hail, fire, whatever it may be. So that is typically what it's going to cover from like kind of unrelated accident things. It's going to cover the damage to your vehicle. Then you come into collision. So collision is actually covering your car, the amount of damage to your car, even if the accident was your fault. So if the accident was your fault, then theoretically this insurance would pay to cover the damage to your car. Let's say you hit a pole in a parking lot. If you have collision, then theoretically the insurance company should pay to either repair or fix or replace your vehicle, depending on how much the damage was and what your deductible was. Next, you have medical payments. So medical payments car insurance, it is meant to cover the people in your car, probably including yourself, if you ever end up with medical bills, whether or not the accident was caused by you. There are a lot of types of car insurance, so bear with me. And the next one is personal injury protection. So this one actually isn't available in all states. I don't even think my insurance offers this one, but apparently it covers medical, but it can also cover other related costs related to the accident. One thing that I did read about is if you have like childcare costs that are related to you missing work or something like that. So I'm not actually too big on personal injury protection. I haven't learned too much about it. Just sounds like another way to get more money out of people to me. But if you know any better about PIP, personal injury protection, then please let me know in the comments below. Another one is rental reimbursement. So basically they're meant to pay for a rental car if you are waiting for your car to be fixed or it breaks down or whatever it may be. So the insurance is meant to pay for a rental car. Another one is called gap coverage. So gap is meant to replace the difference between how much your car is worth versus how much it is that your insurance will pay out. So for example, if you total your car and the car is worth $10,000, but you owe $15,000 still on your loan because of depreciation, maybe you purchased it new, well, that difference is $5,000 and you would lose that basically. So gap is basically the difference between the depreciation and how much your insurance will pay out. And then last but not least, another type of insurance is towing or roadside assistance. So basically exactly what it sounds like. If you need towing or you need roadside assistance, you pay a little bit per month in order to cover yourself, and theoretically it is supposed to pay for a certain amount of towing or a certain amount of roadside assistance. Okay, so now that we've gotten through the types of car insurance, we can move on to the fun part and which ones are actually going to be useful for financial independence and which ones are useless. But before I move on to that real quick, If you're enjoying this video so far, please make sure you like it, you give it a thumbs up, it helps me out, and I really do appreciate it. And make sure you subscribe to the channel and put on that bell for notifications, because every single week I'm putting out new information on personal finance, on financial independence. I know that there's something I can help you with. And currently I'm putting out new videos every Tuesdays and Fridays at 8 a.m. Pacific Standard Time. Make sure you are subscribed and you have that bell for notifications so you don't miss those new videos. And now let's move on to the types of car insurance that are actually useful for financial independence. And there are some practical things that I want to talk about first. And so let's start with state laws. If your state requires you to have a certain amount of insurance, then obviously you should comply with that and have that amount of insurance, at least at a very bare minimum. So you definitely need to be in compliance with the law, or else you're not going to be able to drive. Second, if you have a lease or a loan for your vehicle, then your requirements to have insurance are probably going to be much higher than, let's say, just liability. You're probably going to be required to cover things like comprehensive and collision coverage for the vehicle, as long as you have that loan or as long as you're actually leasing a vehicle. So you definitely have to pretty much comply with those, or else you might lose your car or something like that. So you have to comply with those if you have a loan or if you have a lease. And then as far as financial independence is concerned, you need to look at what you can actually afford without insurance. Can you afford to replace your entire vehicle without, suffering devastating financial consequences? And most people that are on the path to financial independence probably could pull this off. And so maybe it is a risk that they are willing to take. So you need to look at things that you could afford without insurance and things that insurance are just, critical for having. And that's why the first type of insurance that I think is very, very important is liability insurance. I myself have the maximum amount of liability insurance, and there's good reason for that. I want to protect my assets at all costs. And so even though the very likelihood of me, paying out a very, very large amount of money in the case of an accident is probably very, very low, I still want to protect my assets. And the increased amount of cost for higher coverage of liability versus like medium coverage is very, very small, at least for me. So the difference between, for example, $100,000 in liability coverage versus $1 million in liability coverage, for me, I think is close to like $6 a month or something very, very low like that. So for me, it is worth it to have that extra coverage in order to protect my net worth and my assets. And so I think that liability is very, very important for financial independence. Underinsured and uninsured motorists, that's a very big maybe. So maybe you don't have very good health insurance. If you have good health insurance, then maybe you don't need it for medical payments wise. If you can afford to replace your entire car, or you can afford to replace the bumper if someone backs into it and then leaves out of the parking lot without telling you. If you can afford to replace those things easily with cash, no problem, then maybe you shouldn't have underinsured. So that is one that I'm very kind of iffy on, that maybe you should have it and maybe you shouldn't. It just really depends. I personally don't have uninsured or underinsured motorist, but I can definitely see why some people might want to have it. Next, we have comprehensive coverage, and remember those cover like external things other than an accident, the damage to your car. And I'd say no, that this is not important for financial independence because you probably should be able to replace your vehicle with cash with no problems if you are on the path to financial independence and you have a significant amount of savings. So comprehensive is a big no for me for that reason. And that's the same with collision. So if you have an emergency fund, if you have a good amount of assets and you can replace your entire vehicle, then theoretically you shouldn't need any kind of coverage when it comes to collision, and of course unless it's required by your loan or lease. So if you own your car outright and you are pretty well good on the path to financial independence and you have a high amount of net worth, I don't think comprehensive or collision is very necessary. And medical payments, that's a big maybe. And medical payments, that is going to depend on how good your health insurance is, of course. So if you have pretty good health insurance, it should already be covered in case you were in an accident. I think that medical insurance through your car insurance provider is just going to be double insuring. Plus, if someone else hits you and is their fault in the accident, their liability coverage should also pay for that as well. So I think you're covered in most circumstances when it comes to medical payments. So that could be a maybe, but I think it is a no for me, definitely. Next, we have personal injury protection. And again, this isn't offered in every single state. I don't think it's offered in my state. And so I'm not really too familiar with PIP, as they call it. And so that is a big no for me right off the bat, because if it's not required or offered in every single state, then I don't see the point of it anyway. But again, if you know more about PIP, please let me know in the comments below. The next one is going to do with rental reimbursement. I think that is a very big no. It sounds like just another way for them to get more money out of you. What are the likelihoods that you're going to be stranded without a car for so long? And the cost of rental cars I don't think is even really that expensive anyway. And so I think that you should probably be able to pay for a car rental, for 1 week, even if it's like $300 for 1 week, if your car ends up being in the shop for 1 week or whatever it may be. So I don't think that you need to be paying the insurance company to pay for your car rental when you can easily afford it for yourself. And another big one that is a very big no for me is gap insurance, because if you can afford the difference between the depreciation and how much your car is worth, then why would you have gap insurance? If, for example, your car was worth $10,000, but you owed $15,000 on it, if you can easily afford to pay that $5,000 difference without any significant financial strain, then you definitely shouldn't need gap insurance at all. The same thing that has to do with towing. Why would you pay for towing insurance if you can afford the $100 it costs to tow your car the same amount of miles? Like, I think the general standard is like 5 or 10 miles. So if you can afford to have your car towed for $100 for 5 or 10 miles, why would you be paying for it every single month for your regular insurance plan? So that's a big reason why I think that is a big no for me. So you might have noticed that from this list, the only real things that I had a hard yes on was the liability coverage. And that's because I want you, as a person on the path to financial independence or someone who is financially independent, I want you to be very much protected for your assets. I want you to protect your assets, protect your net worth. That is what I do, and I think I strongly believe in it. And if you can afford to replace something without a significant financial strain, then you probably shouldn't be insuring it. One very, very important thing to add is that insurance companies are very, very good at math. They hire people and pay them hundreds of thousands of dollars per year to run scenarios, to figure out, equations, and use some highly complicated math formulas to figure out how much they should charge you to make a profit off of most people. So most of the time, insurance companies are going to win. They are going to receive more money in premiums than they are going to pay out. And so they are very good at that math. So it is a losing game for most of us to try to get more out of our insurance companies than we are going to pay to them. And so keep that in mind whenever you try to buy something that has to do with insurance. Most likely you are going to be losing on that deal and they are going to be winning. That's why they are multi-billion-dollar industries. And car insurance is just one of those really small things that is included in financial independence, is one small thing that you need to ponder. But there are so many other things you need to ponder and that you need to learn about when it comes to financial independence. And that's why, if you haven't already, you need to watch this video that I created called How to Achieve Financial Independence in 10 Years or Less. It gives you a complete guide, a complete blueprint to everything that has to do with achieving financial independence. Now, thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.